Hey everyone, welcome back to Corporate Decoder, the place where we turn confusing corporate filings into something you can actually understand. Today we are diving into a report from Vaxart, a company trying to make vaccines easier with pills rather than shots. And let me tell you, the drama surrounding their latest meeting is juicier than a celebrity breakup, but probably not as interesting. In this video, we are going to unpack why Vaxart had to stop their annual meeting midstream, what they are planning to do about it, and what this all means for the future of the company. Before we start, if you appreciate getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below for more in-depth discussions. Now let's get started. This report is called a Form 8K, which companies file when important things happen that investors should know about. This particular filing is dated June 2, 2025. The main event here is about Vaxart's annual meeting of stockholders. Basically, this is when the owners of the company, the stockholders, get together to vote on important decisions. This happened on June 2, 2025. Now, even if all the stockholders cannot physically make it to the meeting, they can still vote. They do this by submitting something called a proxy, which is basically like saying, here's how I want to vote even though I cannot be there. In this meeting, about 67.89% of all the company's shares that could be voted were represented. This means they had enough people to make decisions, which is called a quorum. So why did they stop the meeting? Well, there was a particular vote they needed to pass called Proposal Number 2. This proposal was about changing the company's rules, its restated certificate of incorporation, to allow the board of directors to do something called a reverse stock split. A reverse stock split sounds complicated, but it is not that bad. Imagine you have 10 slices of pizza and you decide to combine 2 slices into one bigger slice. Now you only have 5 slices, but you still have the same amount of pizza. A reverse stock split is similar. The company takes a bunch of shares of stock and combines them into fewer shares. Companies typically do this to increase the price of their stock if it has fallen too low. The problem was not enough people voted in favor of this reverse stock split. The board of directors, who are the people in charge of running the company, thought this proposal was a good idea. So instead of just giving up, they decided to stop the meeting, which is called adjourning it. They decided to postpone the meeting until Friday, June 13, 2025, to give people more time to vote. They will be doing this through a live webcast, meaning people can watch and participate over the internet. Now, if you already voted, do not worry, you do not need to vote again. Your vote still counts unless you change your mind and want to revoke it, which means take it back. One last thing to note is that March 26, 2025 is still the record date. This means if you own stock on that date, you are eligible to vote, even if you sold your stock after that date. Now, before we continue, there is something called a forward-looking statement disclaimer here. What it means is that when the company says what it hopes will happen in the future, it is not a promise. A lot of things could change and they are not responsible if those predictions do not come true. The company also issued a press release about this whole meeting situation. Basically, they are making sure everyone has the same information at the same time. This is to keep things fair for all investors. You can find a copy of this press release as an exhibit. It is basically just another way for the company to communicate what happened at the meeting. So what does all of this mean? Well, Vaxart really wants to do this reverse stock split, but they need more votes to make it happen. They are giving stockholders more time to vote and are probably trying to convince people that it is a good idea. It is kind of like when you are trying to convince your parents to let you stay out later and you keep asking and giving them reasons until they finally say yes. Now, let's step back and think about this a little more broadly. Why is Vaxart so keen on doing a reverse stock split? Usually companies do this when their stock price is really low and they want to avoid being kicked off the stock exchange or just look better to investors. It could be a sign that they are having some difficulties or that they think a higher stock price will help them raise money or attract investors. On the other hand, maybe they are planning something big like a new partnership or a major announcement about their oral vaccine technology. A higher stock price could make them look more attractive to potential partners or make it easier to raise money if they need it. It's also worth noting that Vaxart is in a pretty competitive field. There are a lot of companies working on vaccines and treatments, so they need to stand out to succeed. This reverse stock split might be part of a bigger strategy to reposition themselves and get more attention. Vaxart seems to be at a crucial point. They have promising technology, but they also face challenges in a competitive market. The reverse stock split could be a way to address some of these challenges and set themselves up for future success. But it is also a bit of a gamble, and it is not clear whether it will pay off in the long run. Alright, that is our breakdown of Vaxart's latest filing. What do you think about this reverse stock split? Is it a smart move or is it a sign of trouble? Let me know your thoughts in the comments below. If you found this analysis helpful, please hit that like button and subscribe for more deep dives into the world of corporate filings. And do not forget to check out our Discord channel in the description for more discussions and insights. Thanks for watching, and I will see you in the next video.